First of all, I want to thank you, Jing. I want to thank Silvio for giving me this opportunity, for being here. I'm honored to be as part of a stellar lineup of experts, colleagues, but also friends, right? And you guys did an amazing job for this two-day workshop. I just hope this will be the case next year. It's like an outstanding lineup of people and topics that you guys cover. So thank you very much. Very interesting. So my name is Andreas Veneris, and this is, as Jane said, first of all, it's collaborative work with Andreas Park from Rotman School of Management at the University of Toronto, Fan Long, who's a professor of computer science over here, and also Poonam Puri, who is at Osgood Law School at York University. And so it's worked by all four of us, and we also had two articling law students. The title of the talk is Saddleback Digital Loonie, Canadian Cash for a New Global Economy. Essentially what happened, the Bank of Canada has been like a pioneer in digital currencies, and I don't say that because I'm preaching the choir as I live here. I will go that into a little bit more detail, but in April of 2020, the Bank of Canada, being a pioneer already and having done a lot of things first, it was the first also central bank, or at least major central bank, that issued a competition to academia for arm's length proposals worldwide for how to digitize their currency, like the Canadian loonie, as we say, right? We say the $1 loonie over here. This was called the Model X Challenge. And then we spent like, we were winners, one of the three finalists, McGill University was the other, University of Calgary was the other, and then University of Toronto with York was the third proposal. We spent the next 10 months working day and night, and then this was released in February of 2021. It came public, the project. I don't represent Bank of Canada. I don't work for the Bank of Canada. These are my personal and my co-authors' ideas. None of what we say over here has been said by the Bank of Canada. This is the outline of the talk today, but it was a wonderful process working with the Bank of Canada. I have to say that because these guys are very, very bright, very, very family environment, and they're pioneers when it comes to digital payments and blockchain technology and all these things that we're discussing those 2 days. It was truly an honor that I allow me also to grow as a person and as a scientist through my interactions with the staff at the Bank of Canada. So we really thank them for what they did for us. So I will explain a bit about the Model X Challenge, and then I will speak about the CBDL architecture. Of particular importance was the offline CBDC transactions that we received very good comments. About 25% of the proposal was legal and regulation, so I ended up doing a lot of law also with two articling students and a very prominent law professor. Poonam Puri got the Law Society Medal. And then I will explain the business plan because Bank of Canada was asking for one and give a very brief summary. So this slide was not part of the presentation that we did to the Bank of Canada, but this slide, I added it like 2 weeks ago. I was giving a talk to a room full of lawyers, a law chamber here in Toronto. And this is a quotation from Law Technology Today from January 31st, 2017, that says the evolution of distributed ledger platforms such as blockchain will offer lawyers one of two choices: disregard and try to maintain the status quo, or try to understand and adapt into the new practices, and concludes that option 2 is the prudent option unless you're planning as a lawyer to retire by 2020. And I remind, first of all, that this is 2021, and number 2, my belief is that this quotation pretty much applies to many other professions: technical, science, computer, legal, economics, merchants, pretty much everybody. I was in my previous life, I was working in the music industry, and that was from the 80s up to the 90s. I went all the way to the Grammy Awards. I quit in 97, and then 2000 BitTorrent came, which was the first instance of decentralization and a $55 billion industry at that time. Today, it's barely 25 billion, and actually half of it is being occupied by new players like Spotify, Apple Music, Google Music, whatever it's called, and so forth, right? So we see the impact of decentralization in terms of BitTorrent into a very large industry and very well-established industry, and we should expect the same thing happening today in finance, in law, in pretty much everything. So that's a quote for everybody to remember. What is a 30,000 feet view of the problem that the Bank of Canada has been looking at? We looked the first, since like Clee said, digitization is exponential, IoT, 5G, AI, all these exponentially pretty much have changed the world. And it's very hard for people who are not familiar and computer scientists like I am to understand, but AI, IoT, 5G will completely wipe out and change the sociability of this planet, right? And that's a very important topic. This exponential revolution has a very big impact also when it comes to financial instruments and in particular payment channels. The payment channels are legacy. They're very, very slow. Usually you get not a digital product, but even a physical product first before the merchant receives the payment. And they're very expensive actually. Don't look ourselves, but even ourselves in the Western advanced economies, we pay around 7% for remittances, and then if you go to Africa, this becomes 15 or 17%. There are cases that people in Africa and other places have to pay 45% of the remitted amount, right? So the poor guy from here came to Canada to work, sent his money to Uganda to his mom, and sends $1,000, and his mom gets like $600. So this is unacceptable. So the digital fiat is already here, whether you call it stable coins, Bitcoins, Ethereums, DM, DCP, which is China's payment system, WeChat, Alipay, the digital euro, or the digital USD, whenever this comes. So this presents for any economy, even as large as Canada's a G20 or G7 economy, a very high risk of displacement, currency displacement, and currency disintermediation, which means that I will not be using my Canadian currency here in Canada. I'm going to be using something else, right? Now, this has a ripple effect when it comes to monetary policy, to fiscal policy, to protection of data, to the sovereignty of my own country, right? So how can the Bank of Canada empower Canadians in this new global economy? Well, we propose the CBDL, the Central Bank Digital Loonie, which is programmable money with very high privacy protection. And it's a social operating system that will allow the Canadian to compete and thrive in this new digital economy. And this happens in two phases, I will explain. Phase one is a disrupting phase that the Bank of Canada comes and completely wipes out the cash payment domain and says, hey, you can use your $20 Canadian bill. Now you can use the digital $20. And phase two extends phase one into a social operating system under very close supervision by the Bank of Canada. And I will explain about the introduction of a shared resource infrastructure. I don't want to call it blockchain, although I call it in the next slide quasi or pseudo blockchain. I would like to call it as a shared resource infrastructure. Now, in more detail, phase one, the Bank of Canada comes and introduces a new platform, which is the Digital Loonie, and provides entry-level APIs, and people can pretty much log in after going through an eKYC process using existing resources that would do KYC. Now, this platform is completely controlled by the Bank of Canada via a narrow bank, and I will explain that later. Narrow bank will be an offspring of the Bank of Canada. Now, phase two, we introduce a blockchain that we allow some of the FIs, financial institutions, to be validators. We allow to serve other service providers, Starbucks, Tim Hortons, Wendy's, or even the guy who's selling tomatoes at the park, at the flea market with QR codes. Actually, this is already happening in India and China, right? In the flea markets, you can use your smartphone and the merchant has a QR code. But this system is under close supervision by the narrow bank or the Bank of Canada. Now, other key features that the Bank of Canada asks for us is, first of all, and we propose, are offline based CBDL cash cards. Now, somebody might say, hey, Andreas, what's the problem with you? You got so busy the last 10 months with this Model X competition, you didn't figure out that you don't need cash to go because there's no restaurant out there to pay, there's no theater open, you're in a lockdown. And the answer is yes, I was very busy, so I didn't even feel the lockdown. But the reason we need offline cards is also to promote, and that was a very strong point by the Bank of Canada, we need to promote inclusion, right? If the guy lives at the cave and he has no internet, he needs to be able to have cash like they have today. If the guy drives from Ottawa to Toronto, there are places you don't have internet access, you run out of gasoline, you need to have offline cash to be able to pay. Like you have 50 or 60 or $100 in your pocket. We did a lot of work to be AML and CFT compliant. We gave an extensive regulatory guidance to the BOC because our understanding from other projects is like regulation, no matter what you design, if it's not regulatory friendly or implementable, it's wishful thinking, right? And we also gave a business plan to the Bank of Canada as they asked. Okay, what is a CBDC? Today, there's two types of money. The money the central banks, roughly speaking, the money that central banks give you, and that's why private banks or commercial banks have reserve accounts with the central banks, and then all the credit loans and all the other things that the commercial banks give to the public. So a CBDC is a state-issued money. It's a liability on the Bank of Canada's or any central bank's balance sheet, right? Now, there are two types of CBDC, wholesale CBDC that they emulate wholesale and retail or general purpose. So wholesale is what we settle on the real-time gross settlement systems today overnight. Now, retail is your $20 bill that you have in your wallet that you go and buy coffee or whatever that is, right? It's not a cryptocurrency. It's laughable every time anybody claims that CBDC is a cryptocurrency. It is backed by government debt. It's not a commercial bank deposit like stable coins. There are two types of not only CBDCs on any kind of like payment system. There's the account-based payment system that they know who I am because I've been through a KYC, and the token-based. Token-based is essentially what we have today, like the coins, the banknotes, right? So nobody knows who has this $20 bill. Nobody knows who has this like $1 bill coin here in Canada or America or anywhere else, right? Now, there's another thing that I want to add is not in this slide. Unfortunately, there's three types of CBDCs. There's the direct, that's what the IMF and BIS and other experts have said, the direct CBDC, that the central bank handles both the ledger of the digital cash, but also the distribution to the public. There's the hybrid, that essentially the central bank still has the issuance of these, but there's a reserve account by every user to the central bank, right? And then there's the synthetic that the central bank says, listen, I never stopped giving money to the people, to the public myself. I was always doing it through the banks. Therefore, I will distribute my CBDCs through the banks, and the banks have reserve accounts with me, right? Not the public. So this is the history of CBDCs. It's very messy. You see a lot of flags. Today, there's even more flags. Essentially, in a nutshell, in 2014, the Bank of China, PBOC, started looking at CBDCs. It was the first one, and it's not a coincidence, the first major economy today releasing a CBDC. In 2016, Bank of Canada started this project, Jasper, and it had 4 phases. The 4th phase was done with the Monetary Authority of Singapore. It has been widely quoted. It's a very monumental and very solid project that they explored blockchain technology for settlement of money, settlement of stock transactions, and cross-border settlement. So it's a quite innovative project that allow other banks, after Bank of Canada started this project, they followed up with similar sandboxes and experimentation. To put in a nutshell, even this heat map you see over here, it's kind of obsolete. It was last week, somebody sent me a link that I can go and see an active heat map. Every day there's more news about CBDCs, sandboxes, pilots, cross-border collaborations, blah, 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 blah. There's way too much smoke to believe there would not be fire. Actually, there's already fire out there, to be honest. The very red that you see, China, Sweden, Bahamas, ECCB, and today the Facebook effort with DM claims to be something like an interim CBDC until the Fed acts, right? So there's already fire, and BIS, the Bank of International Settlements, has reported that more than 80% of the banks, central banks around the world, they have active projects. So what happened with the Bank of Canada? So after they finished the Jasper project, they came in where was that? In February of 2020, they gave a very nice white paper about the contingency conditions. And they say the Bank of Canada will consider issuing CBDCs if cash becomes unusable or an alternative digital money starts taking over. So these are the two trigger conditions that, if you ask me, both of them, one way or the other, have triggered. And then in April of 2020, they said, here's the Model X competition, and here's what they gave us requirements. We need a system to be private, to be regulatory compliant in terms of AML CFT, to have universal access and be inclusive, to be secure, resilient, high performance, and so forth. And the other thing they said is like this kind of system, it needs to be cast with digital features, right? We're not reinventing the wheel. We're just transforming the cast into a digitization period, right? And it's a system critical infrastructure. It needs to be very forward looking, and it needs to promote healthy competition into the payment process, into the payment systems. The minimum functions, it needs to be provide onboarding, linking to commercial bank accounts, being able to pay at physical stores online and do offline transfers. And they said, listen, we don't want to have direct contact with the end user, with the public. Bank of Canada never did that, right? They don't have any physical location. It needs to be of highest quality, high system efficiency. Maybe we're gonna have distribution of the CBDCs through major financial institutions, FIs, and it needs to promote healthy competition into the market. So what is the system architecture? I can bypass this slide. I mean, how we're trying to pretty much align all those incentives together. As I said, we propose a disruptive two-phase process. In phase one, we do a know your customer approach. So everybody who wants to have access to this digital payment platform needs to go through KYC, just like it happens today when you get a bank account or even if you get a telephone number, right? And what we propose to the Bank of Canada is to reuse existing KYC processes like Verify Me that the banks are using, or use Canada Post, Canada Revenue Agency. This is our tax agency, Service Ontario, that I get my health card and so forth. So we can leverage all these things. So somebody is whitelisted and gets a wallet only and only if and only if they go through the KYC process. This can be me as an individual, me as Andreas that I have a company, me as Andreas that I'm an owner of the Tim Hortons selling coffee to 20 million people. So we need to go through this KYC process. Now, this KYC process will be done and established, and wallets will be established with a narrow bank. A narrow bank, I mean, the economists know what a narrow bank is. The narrow bank that we propose is not different to what the traditional or classical version of narrow bank is. But the narrow bank is not a bank that have like branches here downtown Toronto. A narrow bank can be like a corner office at the Bank of Canada in Ottawa, but it will be a separate legal entity. It will have no physical locations. It will be completely controlled by the people at the Bank of Canada. And essentially, the only thing it will be doing, it will be processing CBDL transactions and doing AML CFT overnight. So what is the idea over here in terms of the CBDC architecture? The idea is the Bank of Canada doesn't want to go and give like 30 or 40 or 50 million direct reserve accounts to all the CBDL users. Like today gives reserve accounts to the private and commercial banks essentially, right? This is not their game. So the narrow bank will operate, will be an offspring that it will be this one giving the reserve accounts to everybody that is whitelisted with a wallet. It will be a separate entity, and it makes both the architecture of the system, but also the legal of the system being viable and more easy to implement, right? So it's a conceptual entity that makes the technical and also the practical, both technical and regulatory things easier.
Andreas, can I ask a question?
Yeah, of course.
The narrow bank, so if it's a separate legal entity, but it just essentially just forwards CBDC payments, right? So it just processes payments. How
Correct.
do they make money?
I will get into there.
Oh, okay.
But there's two ways to give you by charging and that's the big. I mean, one thing that's gonna come out of this conversation is that I'm very much against of the private sector using cash payments to make money. This is unheard of. Like for the last 5,000 years since the shekel came out, or 700 years when the Tang Chinese banknote came out. We cannot commoditize cash payments. That's like because Bank of Canada asked me to do a digital version of the cash, right? When I give you a $20 bill, you go pay, the guy's not gonna tell you, hey, like Visa, I will keep you 3%. So you're not paying me 20, you pay me 1970, whatever that is, right? So the second way to make money is, but you can charge a very minor fee to see that, but you will see in a second. Actually, the second is by senior ads, like it always happens, right? By issuing seniors income. But it's a little bit more complicated. It will be very. I will address it like in 3-4 minutes, okay? Even in more detail, this question. But again,
Andreas,
yeah.
Before you move on, a question about KYC. I didn't understand if the narrow bank or the central bank is meant to run the KYC processes here, or is like outsourced it to some?
It is outsourced to existing systems. So basically today, when you get a social security number in America, you go to somewhere. Over here, you go to the Service Ontario. That's how they call it. When you get a bank account, all the banks in Canada, they have this system called Verify Me. So basically, we're using existing infrastructure for somebody to get. You can use also the IRS or whatever it's called here in Canada, the for taxing. I don't remember how we call CRA, Canada Revenue Agency. So you use existing infrastructure. Like no central bank is going to start doing new business of KYC or onboarding customers. You know, this is not their core competency. They never did it, and I don't think they will do it today. But every country has existing infrastructure. And actually, as a footnote, what we propose is to use something very similar to what Indians did with the Aadhaar system, which is an amazing system. In the last 3 years, has over 750, 800 million people on board, and it works like a charm. Of course, it has some issues, but something biometrically very similar to what the India did with the Aadhaar system. Does this answer the question?
Yes, thank you.
Yeah. So the narrow bank also, we need to link to the existing payment systems we have here in Canada. Why we need to do that? We need to do that because we need to have convertibility between CBDLs and essentially commercial money, and because we need to circumvent the FIs in this process, as I will explain later. And how this can happen, it can happen very easily by just modifying the Canadian Payments Act. So that's the Bank of Canada, not the Bank of Canada, the narrow bank, which is essentially Bank of Canada other cover. This is the existing payment systems, the LVTS running today. The Linux is something that is going to come live, I believe, next year. The people are using essentially whitelisted wallets, are interfacing through the narrow bank and the commercial sector through existing systems. So what is the anatomy of a CBDL transfer? It's pretty much straightforward in phase one. So in phase one, you're the user, whether you're an individual or a corporation, you whitelist yourself after eKYC, and then you sign the transaction as we do today with your Bitcoin. This leaves, goes to the narrow bank. The narrow bank says, yes, this guy is whitelisted. Yes, this guy has money. We say the wallets to have up to $10,000. Nobody has $150,000 in his house in cash today. $10,000 is already all big money, or it can be $5,000 for the private sector. It can be $20,000 if you're a corporation. The narrow bank overnight does homomorphic AML CFT. It's very important, nobody to know your data, including the narrow, including your government, including the narrow bank, and I will explain why. This is possibly cryptographically, thanks to Silvio and all those beautiful guys in the 80s who have all this beautiful cryptography that allows this to happen. Without them, and if there's a trigger AML or there's a court order against you, then you can pretty much, reveal the underlying data as it happens today. And then if everything works, then the transaction happens. So the phase one basically comes and disrupts the system. And I will explain whether this is important, and says, listen, we're not gonna be giving $20 bills out now, we're gonna be giving $20 electronic bills. Now, in the second case, in the second phase, what happens, we create, and I will not lie that over here, I kind of borrowed a little bit from what happens at DM at Facebook. We introduce a pseudo blockchain that is run by a set of validators. Mostly will be the financial institutions and the telecommunication telcos, right? And also the narrow band will be a validator, with the only difference that this system in terms of systemic, okay, so this system essentially will be a blockchain. You can do smart contracts. and you allow also service providers to come and piggyback on this system. And service providers is the Tim Hortons, the McDonald's, the Starbucks, or even the guy at the flea market selling potatoes and tomatoes using his smartphone and QR codes. The only difference though is that the narrow bank, again, it's a validator, but at time of crisis, the narrow bank can degenerate the system to phase one at any time they want, and they can have control of this system, right? So essentially what happens in the phase two, that goes back to the question that I received. Essentially what happens at phase two is that the phase one system gets enhanced to do smart contracts and provide this innovation, DeFi innovation and so forth, but the private sector will be paying the bill, right? Because again, you shouldn't expect a central bank to start running systems like that, so complex systems, and pay the bill, right? So the private sector will be paying the bill by being allowed to participate in that. So in the second phase, you have the narrow bank, which is the boss, makes sure everybody plays by the rules, but it's a validating node. It does the AML CFT overnight, is the sole validator in times of systemic crisis. You have the validators, you have the service providers that just piggyback, and you have the users. And this allows essentially CBDLs to become programmable money by approved entities. I'm a big proponent of the Move language that the Facebook folks did. And for instance, what you can do is a very good language. You can use a language like that to do smart contract applications. And eventually you can even create verification standards and have like a Google store or an Apple store that people can submit essentially CBDL decentralized applications and allow the Canadian thrive in this economy. But it's very important. The other thing also you can do at phase two, remember your data is hidden from everybody, except of course you're not playing by the rules and you violate AML CFT. In the second phase, me, Andreas, I can go to TD Bank and say, hey, TD Bank, give me this kind of service, because if you don't give me, I'll go to CIBC and I will give CIBC my data. So it will allow essentially the Bank of Canada help me sell and monetize my data, which is the proper thing to do, because as a friend of mine says, data is the new oil. And we all know how many wars and how much blood has been shed in the last century because of oil. And finally, this allows also Bank of Canada to do their core competency. They're a leader in as a central bank worldwide. They're involved with the CPMI, different working groups with the BIS and G20 for standardization and so forth. And standardization of CBDCs will be a very big issue for the next 2 or 3 years. Otherwise, we're going to end up with all these systems that they don't talk to each other. So Bank of Canada can continue lead in that way. Schematically, that's how it is, the system. Now you have this blockchain. Bank of Canada is the narrow bank, is the boss whenever they want. The blue guys, not the blue guys, sorry, the blue and yellow guys that you see are service providers that don't validate. They piggyback on the system to offer service, trade data, and this creates a healthy ecosystem supervised, as long as everybody plays by the rules, by the Bank of Canada. And that's very important for us, as I will explain later, but nothing changes from what we saw before.
Can I ask another question? Sorry.
Yes.
So the validators, who selects them?
Okay, that's a tricky question, but rule of thumb says it would be the financial institutions, because those guys, like the banks, the commercial bank, Canadian commercial banks, right? Because those guys know how to handle data, know how to handle KYC, know how to handle payments. So, you know, I mean, you don't need like a 500 validators over here, right? You just need like 20 validators. This can be commercial banks. It can be Rogers, which is a major telecom over here. Whoever big that can go through some criteria, right, and come in, but not Starbucks will not be a validator for sure.
Okay, how do you plan to compensate validators? Is there like
okay, validator? That's a very good question. So what you say over here is like, listen TD and listen CIBC. These are banks over here. If there's noise, tell me, because they're doing some excavation outside my. Let me close my window. So the validator right now, what happens, as I said, banks rip you off. Forgive me for my expression. I'm just cutting corners. The payment system today is a cash cow for them. They're making money out of very, very obsolete. It doesn't do micropayments, existing systems. How can you do AI and IoT transactions over there? It doesn't do DeFi. It's not programmable money. It's not different to what was happening in the United States in the 80s, that all these big telecommunication companies were not introducing cell phones because they were making money over the landlines, right? So the way they make money is essentially this system allows them to, the Bank of Canada allows them to build a base infrastructure that those guys can join and then try to attract new clientele from this process and introduce innovation through everything that Christian spoke like an hour ago, right? This thing is not possible, but that's how they're gonna make money. Unfortunately, banks, they're just looking for their profits for the next quarter. Forgive me for being so rough, right? They don't look how I'm gonna make money 5 years from now. And this system allows them to make not only a lot of money, but as we move into cross-border payments that they'll be so fast with CBDCs, they can make money. Canadian banks can make money and find innovation globally, not only in Canada. Otherwise, other systems will have them extinct. I mean, very simple, right?
Yeah, I just think that it's important that the validators on somehow that they're paid in a success-based way, that they're not paid per validation, because you know otherwise you get a fee.
Actually, they will not be paid by validation. Actually, this is like the executive club that say, listen, you come and do the job for me. That's what the Bank says. You come and bear the cost of the phase 2, and I give you access to all this new innovation. If you don't want to, don't come and do it. So they're not getting paid for doing validation. Actually, they do pay from their pocket to be part of this club.
Andreas, but if 1,000 banks come forward and says, I want to be part of it, then what happens?
What bank comes?
So you're saying there are 20 banks. You're also saying they're willing to participate because we are going to get innovations for free. So what if you get, 100, 200 volunteers says, I want to join, the validators say.
Okay, so yeah, but this is political right now. And what happens in Canada, we have the Payments Canada, right? The Payments Canada operates this way, and Bank of Canada is a board member. And I don't remember how many members Payments Canada is the RTGS system we have here, right? And they're happily living together, and they've been operating all those years with a bit of dysfunctionality, as we're gonna see. So if 100 banks come, I don't need 100 banks. If I have, I'm speculating in the numbers now, if I have 20 banks doing validators, I get the data say I want with the performance that I want, right? But that's like Bank of Canada's problem, not mine. But history shows that it's very implementable, right? I cannot get a tiny bank as a validator, right? I need to get we have like a dozen of big banks and so forth. But that's a political question. I certainly agree, right? But it works right now for Payments Canada, so why not for that? Does this answer the question?
Well, let's continue.
Okay.
I think we probably should try to move on since we have about 5 minutes. And Andreas, maybe we should skip some parts.
Until what time I have? It's 11:07 right now. Until what time?
11:10, we can go 11:12.
11:12. So what happens is, for offline cards, we received, I'm not gonna go in big detail, but for offline cards, we received a lot of positive comments. Offline, what we do is a trade-off between security and cost, right? And I did hardware design for 20 years. And we said you're gonna have cards that are gonna have a predetermined number of CBDLs, up to $200 to pay gasoline, food, restaurant, and so forth, right? It can use with NFC to power up this card. And essentially, it's not the wild, wild west, because what happens, you have your card and you sync it with your wallet when it's online, the money leaves to your card, and then there is something knows that this money came from your wallet, your name. And they will know whoever you take your card and you put your wallet, you put your card to somebody else's card, this guy will need to sync again to his wallet to get his money, right? And it's still more contained to what actual cash is today, because today I can put in the suitcase and nobody knows where the money went, right? So I will bypass this. So that's how offline works. You sync your physical card. I mean, that's how the DCP works also for offline. And I can give more detail. Now, it was very interesting for me to work on legal, and I did a lot of legal work for that with the help of a big professor and 2 law students. But the first question that we have to ask is the Bank of Canada allowed to issue CBDLs, right? You don't want the Bank of Canada to go and say, hey, we release CBDLs, and you have all the newspapers chasing them. This can cause a lot of reputational damage and delay the whole process. And we explain, as I said, 20%, more than 20 pages of our proposal is about legal. You need to change a few acts, Bank of Canada Act, the Bank Act, Payment Clearance and Settlement Act, and the Royal Canadian Mint Act to do so. Then there's other problems like how you regulate the narrow band, right? And how you regulate the wallets. We have an extensive analysis for that. And we have also an extensive analysis for AML CFT, for consumer protection, for privacy and tax. But basically, we provide, actually, we're very happy that the Bank of Canada started implementing some of our legal recommendations. And this happened like last month. I got the news. They didn't call me. I just found it on the news, right? And I'm very happy that it means that this had a very big impact. The last thing you want is to spend, we're not going to the Mars over here, like creating a CBDC system. We're not sending humans to Mars, right? It's a year, 2 years worth of work, but you don't want to spend another 7 years doing legal. That's the problem. You don't want another 7 years debating this in a parliament because you're gonna be outdated and your currency is gonna come under risk. Okay, so here's the business plan. The business plan says contingency condition trigger. Now what do we do, right? Why I don't go to the private FIs and introduce the private FIs? In my view, that would be suicide, right? Because if the conditions trigger, remember, first condition is I don't use my cash. Second condition is a bigger universal coin has outtaken my Canadian Loonie, right? And I go to Spadina, pay with WeChat, right? Well, if the Canadian FAS have been already convinced and they use another medium, another Loonie, why should they come to me and help me establish a CBDC? Or if themselves they were taken over by another medium of payment, these guys are losers. Why should I go work with them when I was telling them already, right, to come with me and they didn't hear me, and now they're also outdated. So there's a question to be asked about CBDL distribution by FIs and what this means in terms of competition in payments. As I said, the current systems are outdated. They're very expensive. Actually, today, I moved to the United States 30 years ago. And today, the IT costs are like way, way, way down. Banking costs are even more expensive to what they were 30 years ago. And that's unacceptable, right? So we cannot commoditize payments. Like those guys make a lot of money out of payments, cross-border payments, even domestic payments. And cash was never a commodity. Cash is a common good for everybody, right? So we're not competing with payment systems over here. We're just trying to make an electronic version of physical cash. We strongly suggested the Bank of Canada to avoid the design by committee. That's what history says. Like the Danish bank in 2014, they wanted to upgrade their payment system. They called all the banks together. A year down the road, they realized nothing's going on. Everybody was essentially sabotaging the system. And they say, forget about it. I'm going to do it by themselves alone. And they did it within a year. In Canada, we modernized this payment system we have since 2015, for God's sake, and it's still not there yet. They said next year it's got to be ready. And in Brazil, they introduced PIX, which is a payment system, the Bank of Brazil. It's not 9 months. It took 9 months. Apologies for this error. It took 9 months for the banks to integrate with it. And most of this was regulatory, I was told. But it was a little bit over a year that it took them to introduce this system. Now, imagine trying to introduce this system by going to the financial sector and try to pretty much bring them in. They will sabotage the system because they don't want to cannibalize their existing profits. It's very easy. The private sector can make a lot of money. They can make a lot of money by branding the wallets in the first phase, being validators, service providers in the second phase, and competing all this new innovation that Christian spoke before in a new global economy. The system cost is not that much. Basically, the big system has around 20 people working. We do extensive analysis that the number of transactions will be less to what we do at the Canadian Stock Exchange today. So the narrow bank doesn't need to have 200 people, right? So it's not a huge. And there's revenue for the Bank of Canada in terms of seniorities, and you can assume some nominal fee for transactions, like 1 cent per transaction, right? This is gonna be able to pay for the effort. This is how the requirements go versus to what we propose. I'm gonna pass on it. And this is the summary. It's like, can all Canadians access the digital economy today? The answer is no. What viable alternative there is? Well, every viable alternative. The BIS came 2 weeks ago, 2 or 3 weeks ago, and gave something a big warning to the central banks. They say, you guys have to start issuing CBDCs sooner. And it's not only the Bitcoin or the stable coins, but social networks have the DNA effect, the data network acquisition effect. So if your family is on a social network, then your friends of your family go there, and essentially they concentrate the people, and this effect can disintermediate your own currency, right? So that's a big risk for the central banks and their job, right? So what we propose is a two-phase proposal that it will allow the private sector to innovate, and it will protect the data sovereignty, the data, and generally speaking, Canadian sovereignty in this new digital economy that is about to change pretty much everything when you consider AI, IoT, and 5G, and actually 6G these days. So this is the conclusion of my talk, actually. And we urge the Bank of Canada to do it sooner rather than later. But as I said, Bank of Canada has not committed to a CBDC, and none of what you heard over here is their opinion, is the opinion of